Hey everyone, Bruce here with the Coastal Real Estate Company. Thanks for visiting our blog for the week of August 11th, 2022. This week's topic is why the forbearance program changed the housing market. So let's dive in. So why the forbearance program changed the housing market? When the pandemic hit in 2020, many experts thought the housing market would crash. They feared job loss and economic uncertainty would lead to a wave of foreclosures, similar to when the housing bubble burst over a decade ago. Thankfully, the forbearance program changed that. It provided much needed relief for homeowners so a foreclosure crisis wouldn't happen again. Here's why forbearance worked. Forbearance enabled nearly 5 million homeowners to get back on their feet in a time when having the security and protection of a home was more important than ever. Those in need were able to work with their banks and lenders to stay in their homes rather than go into foreclosure. Marina Walsh, Vice President of Industry Analysis at the Mortgage Bankers Association, notes most borrowers exiting forbearance are moving into either a loan modification, payment deferral, or a combination of the two workout options. As the graph below shows, with modification, deferral, and workout options in place, 4 out of every 5 homeowners in forbearance are either paid in full or are exiting with a plan. They're able to stay in their homes. As you can see in the graph below, 36% were paid in full, 45% were workouts or repayment plans, and 18% of people were still in trouble. So what does this mean for the housing market? Since many people can stay in their homes and work out alternative options, there won't be a wave of foreclosures coming to the market. And while rising slightly since a foreclosure moratorium was lifted this year, foreclosures today are still nowhere near the levels seen in the housing crisis of 2008. Forbearance wasn't the only game changer either. Lending standards have improved significantly since the housing bubble burst, and that's one more thing keeping foreclosure filings low. Today's borrowers are much more qualified to pay their home loans. And while the majority of homeowners are exiting the forbearance program with a plan, for those who still need to make a change due to financial hardship or other challenges, today's record level of equity is giving them an opportunity to sell their houses and avoid foreclosure altogether. Homeowners have options they just didn't have in the housing crisis in 2008 when so many people owed more on their mortgages than their homes were worth. That's not the case right now. Thanks to their equity and the current undersupply of homes on the market right now, homeowners can sell their houses, make a move, and not have to go through the foreclosure process that led to the housing market crash in 2008. Thomas LaSalvia, chief economist with Moody's Analytics, states, there's some excess savings out there, over $2 trillion worth. He's talking about equity. There are people that have ownership in those homes right now that even in a downturn, they'd still likely be able to pay that mortgage and won't have to hand over the keys. And there won't be a lot of those distressed sales that happened in the 2008 crisis. So bottom line, the forbearance program was a game changer for homeowners in need. It's one of the big reasons why we're not going to see a wave of foreclosures coming to the market right now. So if you have any interest in buying, selling a mortgage, or you just want to chat real estate, give us a call or send us an email today, bruce@sflcoastal.com, or you can reach me at the phone number on the website. Remember, who you work with is important, and as always, your strategy matters. Talk to you guys soon.